Ladies and gentlemen of the crypto space, we're live on a Wednesday, June 29th at 12:18 p.m. So, of all times, this is a time to break down old, failed narratives and reinforce good ones that work, ones that are different. What have we done over the last 2 years? We've peered through the madness. We've seen systems for what they are, trying to sift away the fluff, sift away the garbage, sift away the stuff that is destined to fail, to see stuff that is reasonable, stuff that is rational. And the same thing is with narratives, how we think about things. And clearly, there's a lot of big narratives out there, like the Fed prints all this money and the Treasury prints all this money. But we've dug into macro over the last couple of years, and we have a world out there with currencies, and each currency is printing and issuing bonds, and they have companies that issue debt that they take dollars and equities and assets, and you're able to get leverage, and then everyone's fractional reserve, so nobody holds dollars in a bank account. The bank has a liability that's representative of a customer's deposit. So it's all leverage. And we could talk about the fluff. We could talk about M2. We could talk about the derivatives market, the options contracts, and equities and leverage, and margin on the margin and options. It's a big market, and certainly a fraction of the size of the derivatives market, and a fraction of the size of the Eurodollar market. But peering through that madness, what do we have on the screen? We got base money. This is the amount of dollars on planet Earth. So let's peer through this madness. Let's bust this narrative. Everyone's like, oh, they're increasing the amount of dollars. So, yes, as you can see here, over the past 2 years, 3 trillion, 3.2 trillion, and it's come down, and it's a disinflation, and went to 6.4. So literally 100% increase in base money supply in the last 2 years, with a decrease of a fair amount of almost $900 billion. So, we have a big planet, and there's a lot of people and a lot of currencies and a lot of corporations and a lot of financial products and services. And we've talked about quadrillions of dollars. And now we look at this chart, and what we see is a number that's a couple of trillion. This is all the dollars on the damn planet, boys and girls. This is everything that every country and every person has to fight over. They are fighting over these dollars so they could put deposits and collateral and leverage and create the entire M2, create the entire options and margin markets and equities markets, and don't get me started on the derivatives markets, because that's the other side of the coin. Those are the bonds. That further complexifies the conversation. But the point I think that is most important is times have changed. After 2008, everything went completely wild, but it still doesn't change a couple of the core components of a narrative that's the most important. The dollar is meaningful because every stupid company on this planet accepts them. You could walk into any store and they're going to be like, okay, I'll give you whatever you want for these pieces of paper. And that's important. You can't go in with a bond. You can't go in with a security. With you can't go in with crypto. They don't really accept it. What they do is they have companies that act as an intermediary, that take a deposit and instantly convert it to fiat. So that introduces some novelty in the financial system, which is very nice. And I myself use that with BitPay. I'm able to pay with a debit card. So I'm paying using cryptocurrency, but it's ultimately dollars, and these are the dollars, and there's few dollars. And the point that I'm trying to hit at is there is not a lot of dollars. There's a shortage of dollars. And the narrative that needs to be busted is that the dollar is horrible and bad. And I'd like to point out a chart. I don't have it up but everyone knows that chart of the dollar's value over time. It's not as simple as they print more dollars and the dollar's value goes down. The biggest thing that affects the dollar or the value of the dollar with regard to purchasing power is supply and demand of the shit that we buy. If there's an over time, we have double the population of what, the 1970s, almost double. We have like 200 million people in the 1970s. You could pull up a demographics chart, but the point is, uh, the demand has increased and the supply has been exported. There's no supply in the U.S. for a good amount of items that the demand is seeking. So the supply and demand imbalance over time is going to be probably the largest contributor to price appreciation, CPI, consumer price inflation, and that decreases the value, the purchasing power of the dollar significantly. I mean, look, the effect that increasing base money has on the value of the dollar goes through so many layers of complexity. It goes through all the Treasury, the Fed, and the leverage that the Fed puts on the Treasury, and then the bond market, and how the U.S. issues a bond and someone buys it, so the U.S. is buying dollars. You got to remember that. Isn't that reflexivity? A good part of the stories I like to tell is trying to put the legacy financial system in crypto terms. So, did you know that the U.S. buys back dollars from circulating supply? The U.S. is actively disrupting circulating supply of U.S. coin. So, we have experienced this type of financial behavior over the last couple of years. And it's not something we traditionally had experience with prior to really the beginning of 2020 when we had access to these types of financial products in the crypto space. And no one really did any of the stuff we do in crypto in traditional finance, so we never really had a chance to digest it. Um, but we've had this experience over the last 2 years. So there's a shortage of dollars given the massive, massive global population, and the US is buying back dollars, and this is the story of every country. They're all issuing bonds, they're all disrupting the circulating supply of their relative, respective fiat currency. The reason it's so important to bust these narratives is because of how many people have been hurt by depreciating markets. You can't just be in it for the tech. You can. It'll destroy your portfolio. The vast majority of people's portfolios are catastrophically compromised right now. And that's not right. And you could argue it's important to own like a UTXO asset. It's not confiscatable. Sure, but when you have to go to the fucking store and buy some food, it doesn't matter much. You need to be able to buy food. You need to be able to pay your mortgage. You need to pay your car bill. You need to pay your property tax. You need to pay these things. So that narrative that the dollar is bad is getting in the way of people's financial well-being, and that's not fair. It's not fair that there's no one, or other than myself, like right now, saying, stop thinking like that. We could do better next time. We could carve out more cash, and cash is an important part of the portfolio because cash pays the bills. So the goal is to have more cash. The goal is to be able to outperform inflation, consumer price inflation. That's all that matters. If the nominal price of a box of cereal goes up, you need to make more money. If it stops going up and consumer price inflation comes down, which is going to, because CPI is going to completely roll over, we're going to go into a very strong deflationary impulse. We're going to have a very pronounced recession. The Fed is behind, whatever they are, behind or just barely understanding what's going on with the reflexivity of supply and demand balance. And this thing's going to bullwhip hard, and that's the whole point. Everyone's talking about how sharp the recession is going to be. So the dollars are extremely important in these times. The dollar is outperforming. The dollar is going up in value relative to frickin' everything. The dollar has gone up relative to curve 5x on the money. So clearly, you don't have 5x more dollars. But the fact is, it outperformed. And you don't have more money, but that doesn't mean you needed to. That doesn't mean we deserved or we had an opportunity to make more dollars. It means that there was no opportunity to make more dollars. And that's what a period of austerity is. And we need to appreciate and respect that this is a time where we're lucky to have the dollars we have. We are lucky to have been exposed to this bullish period where we can have more and more dollars. This is an important thing that I think about a lot, is to be appreciative and humble and not necessarily try to make more dollars, especially in an environment where the dollar is outperforming. And this is that environment. There's so many folks were so expecting curve to hold on to this bottom green line right here where the cursor is. They were thought it was going to hold the $2 range, and if you lose over half your portfolio, that's devastating. Imagine the poor soul that borrowed their kid's college fund, or the down payment for the home they were saving up. And now it's over, cut in half. It's down 30, 35, 40% what it was. That's a tragedy. And I don't want people to do that. Why? Because I want people to have money, because when the bull market comes around, it's time to make those multiples. This system, post '08, offers free money mode. The system is either on or off. Free money mode is either enabled or disabled. It was different before this, and that was before my time. I have come into my financial prime probably about now, about 40 years old, and I really have a good understanding of reductionism. My capacity, my skill is to reduce these complex systems to things that are more easy to understand. Up, down, left, right, yes, no, good, bad, and the nuances of evaluating monetary policy, so on and so forth. So that's what I like to do. And this is what I see. That why are people trying to make money in not easy mode? Why are we hurting ourselves and frustrating ourselves with anxiety trying to find the bottom in not easy mode? Wait for easy mode. Protect the damn dollars. You need them to pay your bills. Why? Because when easy mode comes around, you're going to get the multiples. You're going to get 10x, 20x, 30x, 40x, 50x on the portfolio. Because next time we're better prepared. Next time we're going to be more concentrated. Next time we're going to be able to see the better protocols earlier. Next time we're going to be less diversified, less fearful, more comfortable, more confident, greater conviction. And we're going to know that we got to sell that shit. Because if we don't sell that shit, someone else is going to sell that shit. Now, there's two components that I don't want to digress too much, but part of what we do, having assets, is a cash grab. You need to cash grab to outperform consumer price inflation. That's a given. We can't argue with that. But there is another narrative of ownership. Asset ownership is meaningful, but it cannot be, it's not more than the need to cash grab. You need to protect the principal, the core of the portfolio. You need more cash over time so you can service nominal debt obligations and monthly overhead expenditures. And you need to build a base of assets that over time grows, producing more and more revenue over the years. Now, it's going to be very interesting to see when these markets stabilize in the next 2 to 4 years, what kind of base forms from where we are now and where we were back in like a March of 2020. Measure from the bottom the portfolio, measure from the bottom the behavior of assets over the years, which is why, as a reductionist, they focus so much on survivability. What is likely to survive? Because what is likely to survive is going to be able to show you those behaviors over these yearly time frames. So now you can get a sense for how these assets behave when the economy is on versus when the economy is off. And now we can make better decisions because we have more information and we're always contributing to the fact that we could do better next time. Now, I guarantee you in 2 years, when it's free money mode, we're going to be able to come back in 2 years after that and be even better, be even more nimble, be even more experienced, be able to cash grab a bit more, build more of a core portfolio, and have that core portfolio be more and more productive because we've been able to isolate the best assets that are capable of producing cash over time in good times and hopefully in bad times as well. And look, this is very interesting. Curve has been very productive this entire all this bearish activity. Now, it's finally the case where Convex is reducing the amount of bribe it's paying VECRV. Frax did mention they're going to come back in, I believe, I hope, to VECRV directly. Warden has not much availability and doesn't even look like it's online right now. That's unfortunate. But next week, Convex cuts in half to 6,000 from 12,000. And the week after is also 6,000. So, by definition, it doesn't make it a bad investment. It makes it a period of austerity, making less money. You're able to you have to cut back, and you can't spend as much. I really, really am hopeful to see other protocols step in, and they don't have to be exorbitant. They just need to produce cash flow. They need to be equal or around or even less than what it is now. But it'd be nice to see 5 or 6 different protocols, 3 different bribes here, but at least 2 protocols. I mean, Curve's the only one who's paying VCRV incentives. In that regard, Convex has held up very well. If we go over to the Llama, well, you can see the history for. No, we can't see the history for Convex bribes. Oh, yes, we can. So there's a lot of bribes. There's a lot of cash going around, a lot of protocols that focused on convex. So it's more productive. But the problem is, well, for myself at least, I have a larger VCRV position. And we'll see in hindsight if maybe it was better to have a larger CVX position. But maybe that wasn't the case because CVX ran much more multiples. It's down 90% from no, more than 90%. It was at 60. So from 40, it'd be a 90% dip. So it's down much more than Curve. Curve has held up much better with regard to price point, yet Convex is still more productive, more revenue per VLCVX, 5.94 cents as compared to a fraction of a penny, zero 0.2. This is up at a penny for quite a long time. But it's more expensive to purchase a convex position. So what does this tell us? This tells us if convex keeps going down, there's a potential opportunity to take a relatively decent sized position. I mean, if convex goes to $2 or $1, yeah, our portfolio is going to be slaughtered. But the point is, we should have a large cash position, and next time you'll do better on that. Because with a large cash position, you can take a larger CVX position, and CVX is paying. CVX is paying 5 cents. Look, if I had the same amount of VLCVX as I do VECRV, 5.94 cents, I it would be I'd be making like 50 grand a week, 100 grand a week. All right, so in retrospect, I could have. No, it wasn't the case. In retrospect, I should have had a larger convex position because convex has depreciated significantly more than curve. So that's the deal. So that's my evaluation of what played out, and I think it's heading in the right direction. It's speculative in that regard. Uh, if how well it does, it's speculative with regard to survivability, but that is the most important core thing that I could focus on right now that I've told you guys about is what will survive, what can survive, what has the potential to survive. And that's where we are. It's not about revenue. It's a period of austerity. We're making less and less money. Clearly, there's no gains. Is anyone making gains on assets? No. So this is what survives. And if you could get a good price. So I'm not too fond of like buying something, buying the bottom on an asset that I just have to sell. But I'm interested, much more interested in buying a very depreciated price point for a revenue producing asset based on the evaluation that I just told you guys. If I could get a fair amount of convex that's paying out hopefully 4, 5, 6 cents per VLCVX at a cheaper price, if convex is a dollar 50, $2, I'm probably going to want to buy a fair amount because 6 cents is extremely productive and it's sustainably productive from a third party. Let me answer some questions, see if I can help you guys out. I hope that was an interesting story today. Raul, Crypto, Jake, Angelo, hi everyone. Hope everyone is fine and safe. Yes, indeed. Dan's in the house. Mark Purdy, good morning. Aura's fine. I'm sure the price is getting completely hammered at this point. $1.15. Yeah, I'd be interested at. So I took a position in Aura, probably right around here, 65 cents, give or take. Given market conditions, it'd be interesting to buy some more Aura down in the 50s. Maybe it goes down further depending on how much their liquidity bootstrapping put into circulation. Maybe we get some lower lows, 40 cents, 30 cents. But I'd probably be interested in a position lower than 50. I'd bite off a little more, probably between 30 and 50 cents. And if it doesn't go down low, I don't have any need to take a position. Don't force a position in this market. Either going to get a ridiculous deal, and that's Buffett's ideology. Either you're going to get the blood in the street, you're either going to get something at a ridiculous discount, or don't bother. Don't chase a return because easy money mode will return, and then you could just buy anything and it just goes up. This show is a hidden gem, Chris. Thank you. I hope it helps because it's definitely stuff that most people don't talk about and how to think about things differently because most people just think about all the same shit. We do things differently around here because we can do better. Dominic, hey Cab, back again for another one. Hope all is well this week. Things are good this week. Dan, in it for the tech is a meme. It's a big narrative. I wouldn't bank on it. It's a big narrative. The memes are valuable in society with regard to culture. Look, it's obvious. It's big stuff. You can't put money on that. Very few. The NFTs were just such a pure cash grab. That's a pure cash grab system. Wild. Zoidberg's in the house. A pleasure, Stephen. Nibble. Thoughts on the Solana phone? No interest from me. Mickmon, do you think an SDCRV position on staked out would be costly in gas, meaning only 10K positions would work? Well, these are hard choices. And my recommendation, overwhelmingly, financial advice in this market is don't take any damn positions. You're either going to get an absolutely crushing discount, devastated price point, combined with your determination that a protocol has potential survivability. It's speculatively going to survive, and the price point has been destroyed. Well, you're not going to take a position. There's going to be no appreciation in this market. There's going to be no number go up. It's going to be number go down. So you either get 95, 98% discount on an incredible asset that has survivability, that has the properties that we want. It's a federation, offers cash flow, and there's other protocols using it, which is the federation. And that is likely what's the most meaningful production of the crypto space thus far, is these protocols acting in concert, these protocols acting in an organized fashion in a federation, which is analogous or metaphoric to sovereign nations and how they do trade deals and how they coordinate at the central bank level with regard to monetary policy. It's a federation. Big stuff. Big twats in the house. Hello, my friend. Hey, Noah, have you changed your opinion on your commodity investment? Oh my God, I've down 25% of my commodity portfolio. No, I'm not going to change anything. That is I've said it since 2016. That is a target 2030 portfolio, and I'm not going to buy it and sell it. I'm just not. That was a different amount of money. That was, and it came many years ago. It was much smaller than it is now, so it's still significantly appreciated. And that is, I don't even look at it most of the time. Last time I checked on it was like 2 months ago. Down 100 grand. Horrible. Oh, check back in 2030. That's not a portfolio that I have time, patience, or interest to look at and trade or reallocate or rebalance. I have the right choices. It's the only choices. Um, Livent pretty much buying up the 50% of Namaska indirectly, but fucking Namaska. Anyway, I've told that story before. I can't stand these companies and these boards of directors, and I can't stand having people making decisions on a board. That's why I love these protocols so much. They're determinate, especially the truly decentralized and disintermediated ones like even Curve and like Uniswap's not going anywhere. That is so decentralized. All these IPFS front ends. Once you got the contracts deployed, you can't change them, no matter what kind of regulation comes down the pipes. It's not possible. So I haven't changed my opinion on that commodities portfolio. Big Bond, when we get back in easy money, that is easy money mode. We'll only know when easy money mode returns, unfortunately. So I don't like to speculate too far in the future, but frankly, easy money mode. What do I think about the Curve Federation? That's why I went with VE Curve. It's the base. Easy money mode. What if Curve's doing $10 billion a day in transaction fees? Then I might not even give a crap about incentivized voting. Right now, it's doing about a quarter bill a day. If it's doing 20x that, yeah, the weekly transaction fee revenue is going to be quite nice. And I won't have to worry much about the bribes. Albeit that'll be doing well as also, because if it's doing that kind of transaction volume, folks are going to want the incentives to be applied to their LP position, because that's how protocols get off the ground. That's the story that Tetranode talked about, and I absolutely agree with him. Scott's in the house. When you say CVX bribes are paying, do you mean the CVX that's locked on Convex for 16 weeks? Yeah, VLCVX pays you 5.9 cents per vote lock CVX. That's paying. That's big money. You have 10,000 of those. You're getting paid 10,000 divided by, well, times 0.059. It's a lot of money every 2 weeks. For instance, it's $2,400. And I have this is 40,000. I have 40,000 VLCVX, and that's paying $2,460 every 2 weeks. I miss the good times. Believe me, I miss the good times. What was around 15? Woo, those were better 2 weeks. Oh, they took away the punch bowl. They took away the good times. Damn, VLCVX was paying 56 cents. Oh, come on. Come on, crypto market. Can't we have a little bit of juice? Can't we have a little bit? Are they going to take away everything? 90% down on revenue also. Oh, bastards. All right, I think we're close to the end, though. I think the system is going to break and they're going to capitulate. Wow. Wow. 105 on the DXY. It punched right through. I mean, if this thing punches the wick up to one, if we get a wick, if we go to 106, everyone's going to be talking that the system is fracturing, is breaking. We're getting close, folks. But the problem is, as this system fractures and breaks, these numbers are going to go down, the price points of the assets. But bear in mind that on the other hand, what did I just say? There's nothing to buy right now. You wait for things to be devastated. So, look, we're heading in that direction. Heading in the direction of everything being completely crushed, everything being sold. And then you'll be able to get those cheap numbers on these wonderful federated assets. What's the difference between Vodium, Warden, and Hidden Hand? They basically do the same thing from a functional perspective. They're different products by different developers. Warden is by Paladin. Hidden Hand is by Redacted. And Vodium, I don't know. Vodium is Vodium. Vodium kind of spun up pretty much on the back of Convex. Danny, hey Cap, haven't heard you talk about the commodities portfolio before. Anywhere I could find more info? Yeah, it's buried deep in the history of videos I have, but it's been devastated. So it was up. It was, I had assets in the commodities portfolio that were up like 10x, 15x over the last 2 years, but now everything's down 30%, which is still up, but I'm, maybe I'm not going to do a whole stream talking about the commodities, but briefly, I like the battery metals, but it's a very long target portfolio. 2030, lithium, cobalt, nickel, and graphite are the key components of lithium ion batteries. So note the 2030 target and note how every damn car manufacturer is going to be producing battery electric vehicles. So there's the rationale there. And you need that kind of time horizon in equities because you got to deal with the cyclicality of markets. You got to deal with the stupid rate hike cycle, rate cycle. And it is what it is. Equities and traditional finance are slow movers. You got to let a decade play out for a bet to play out. So there's the bet. It's very obvious everyone's going battery electric, therefore they're going to need a lot of battery metals, and they don't make enough battery metals, especially in the U.S. There's zero battery metal production in the U.S. It's 100% imported from China. Food for thought. Peter, hi everyone, a pleasure. Unlock tomorrow. What are we doing? I don't know. Convex is still very productive. I should be I showed you guys this, and this is my sentiment. Many people would be like, if you went from 22 grand every 2 weeks to 2 grand every 2 weeks, you'd be broken. You'd be disappointed. And I try and force myself to be humble and appreciative, and thank God it still pays. I'm so thankful that I still have a very meaningful income. It's something to be grateful for. So I'm tempted to retain the position and let it just ride because I want the position, and that means I'm going to sell and buy back lower. So I might as well just ride it out and have a long target date. And target date for what? For liquidation? What am I liquidating for? This is the type of asset I want. How much further is it going to depreciate? Another 95%? I think if we got the $2 range, that'd be a very interesting buy zone. Anyway, don't don't mistake any of my optimistic sentiment for when I may or may not purchase anything. Is there ever a BTC price where you would buy even in this poor macro environment? It's not a productive asset, and I'm not Michael Saylor. I'm not. I want to save my money till 2100, 100 years. Not a billionaire. He has countless millions of dollars a year cash flow from his business, personal income. He has countless millions of dollars in savings. And it's a completely different story for a person like that. We need to outperform inflation as regular people. We're not saving for 2100. The amount of money we have, I disagree with the narrative. I disagree with the general public Bitcoin narrative. Okay, I agree with the savings component of it. Small parts, 5% of savings, and it could appreciate meaningfully. Get a critical quantity of Bitcoin. DCA, I agree with. But I'm a firm believer that cash is misunderstood, and I'll recycle back to the beginning of this stream, and that's my sentiment. So I have a little bit of Bitcoin. I have like a half a Bitcoin floating around. Interestingly enough, why do I have a half a Bitcoin floating around? For people and companies that want payment in Bitcoin. For people that want Bitcoin, I have Bitcoin that I could pay with. So that's the same reason I have the cash position. Everything in the world accepts cash, so I have cash. I have Bitcoin because some things want Bitcoin, and I have Bitcoin to pay with it. I have Ethereum because I need gas, and some things require Ethereum payment. And that's a reason to have a currency. You have a currency because it's needed for spending purposes. So that should hopefully help you judge an appropriate position size for the Bitcoin. It shouldn't be everything. It doesn't make sense to be everything. It's not a productive asset. It doesn't produce income. And that's critical because that's what you do every day going to work, produce income. So what you want is assets that produce income so your assets work so you don't have to. That's an incredibly meaningful thing to own. It's a piece of enterprise. It's the historic dividends investor approach to asset management. So, what we've done on this channel is blended all of these types of investment strategies and all of these narratives together to give a very unique story, a different story, hopefully a more successful story for more people. How would you classify the cash producing tokens in your portfolio in a risk reward curve? Cash producing tokens. Um, I consider curve a purchase. It was a speculative purchase. It doesn't have any value. I'm never going to liquidate VECRV. It's worthless. It produces cash. It produces income, which is the same exact thing my work does. Me going to work, me having a job from a boss that's W 2 on salary, or maybe you're a 1099 employee, but you get a weekly income. So I purchased a me. I purchased an employee speculatively and optimistically, and hopefully that purchased employee becomes just as productive as I historically was with regard to my income. That's generally how I think about it. Mickmon, it's so funny you can suddenly get a one whole Ethereum for $1,000 and nobody wants it. Yeah, there's a big narrative. The big narrative is the deflation. It's a big deal. And it's still not productive. You're still going to have to, it has to be a cash grab. At some point, it has to be sold for to pay for things that you need in your actual life. So I don't know. I have, my narratives and the way I think about things is always evolving. So yeah, obviously the nodes are still a meaningful thing, especially in a deflationary Ethereum environment. But the question becomes, how productive is it compared to other types of positions? And ultimately, I truly believe the protocols on the Ethereum network will become more valuable than the Ethereum network. And that's the true threshold for really success of the Ethereum network when the protocols outperform the network itself. What's your opinion of the housing market? That shit's going to absolutely collapse. People that bought homes 10, 20, 30% above asking, all these inflated prices, it's going to absolutely collapse without intervention. Nobody's going to buy these homes at 6% mortgage rates, which is going to drive down the asking prices. People are going to ask less money because people have to liquidate, and it's going to totally screw adjustable rate mortgages. There's going to be a wave of bankruptcies. It's probably better, well structured than 2008. Much more fixed rate, better buyer qualifications. But anyone that all of a sudden their mortgage rate doubles or triples, they're screwed, especially if they're on fixed income. absolutely screwed. This thing's going to absolutely collapse. Everything's going to collapse. It's the everything bubble. Equities is already collapsing. Imagine equities comes down another 50%, and the housing market collapses 50%, and then commodities collapses 50%. Oh my goodness, they're gonna intervene in this thing. It has intervention written all over it for the very reasons that Luke Roman talks about. They can't handle a deflationary impulse with debt to GDP the way it is. They need the tax receipts. They can't have GDP fall down 20%. They wouldn't be able to pay the bills. It's a sovereign debt crisis, as Luke talks about. He's spot on, in my opinion. And that's the way many people think. It's not just Luke. Luke has his presentation, the narrative, the story that he tells was very comparable to Brent Johnson's. Is very comparable to the way Raul talks about things. All their stories are very, very comparable. And what happens is they just define or tell the story slightly different. Their interpretation of how it may play out. What is the trajectory? What are the timetables? But they're all basically telling the same story, and it all reduces to balance of payments. You need income to pay the bills. The government needs tax receipts to be able to pay Medicare, Medicaid, Social Security, the military. Those tax receipts start dropping, everything starts completely collapsing. Yeah, XMR. Hey, Jason, how are you? XMR is a big deal because it's a currency. It's a currency on the dark web, and that's meaningful. As an investment, I think it's off the radar for most people, but it has a very large cultural significance, and that's meaningful. So there's no reason to discount it as a portfolio component, especially as a currency. Just like I talk about cash, clearly we could spend it, and why I have Ethereum because we could spend it. You need to have currencies. You need to have a savings of currencies that you need to spend to perform to achieve the things you want to achieve. If somebody wants Bitcoin, clearly you have to hold on to some Bitcoin. And maybe they don't care about the price. Maybe they care about the Bitcoin quantity. They're always accepting a tenth of a Bitcoin for something, and they're not too interested in the dollar price point. So I've had people that have worked like that. I've had artists where I've done commissions where they're like, okay, I want an Ethereum to do this piece. They didn't ask the dollar value of the Ethereum. They said, I want an Ethereum. Therefore, the Ethereum is the currency. Therefore, I really should have a little bit of Ethereum so I can make these types of payments. So XMR fits that type of description of why and where it fits into a portfolio. One curious view, a pleasure. Last couple of questions. I'm going to wrap it up. Do you ever try and explain to older, uninformed people the crypto space? And how do you do it? It's not easy. Most people don't understand money, savings, interest, nominal versus real. With regard to inflation, most people don't understand inflation. It's impossible to understand to really explain it to folks because it's an educational process. Things that I talk about are talked about, are probably not even talked about at university. But this is the type of thing that would be talked about in a class in university. I've thought about becoming a professor, maybe when I get a little older, an adjunct or something. But this is a story, and this is an education. Look, consumer price inflation is not currency inflation. Inflation, you could say, as Jeff Snyder says, the system is disinflationary. We're having a strong deflationary impulse with regard to currency. It's right here on the graph. The system is deflating. The amount of currency is deflating. We have a deflationary dollar right now, and clearly it's inflated over the longer time frame. But right now, since December, for 6 months, the dollar has been deflating. Swallow the pill. It's obvious. It's sitting right in front of you on the chart. The dollar is deflating. And yet, if you say to the general public that would be ludicrous because the prices are up. Everything's inflating. No, that's consumer price inflation, and that's supply demand balance. It's not, it's only loosely coupled to currency inflation and deflation. So it's a very complicated story. Lots of macro developments with NATO. That was an interesting meeting. I just saw the ECB and a bunch of folks talking. Yeah, complicated. Good evening. A pleasure, Frank Corp. Peter, if one were sitting on cash at the bottom, do you go for the majors, ride them, and take profit by? Well, that's an interesting strategy. So I was thinking about that. Like, if it was 2020, you hit the Bitcoin rip. Bitcoin bounced off 3,600. You get a 5x, a 10x on the portfolio. All you needed to do was have Bitcoin or Ethereum, which probably did even more multiples in a similar time frame. And then you can liquidate for cash producing assets. But bear in mind, hindsight's 2020, and the next time the economy is turned on, it doesn't play out the same way because look, now we have a cohort, a group of enterprise grade assets that we're assessing survivability that may do very well. We didn't have that in 2020. We have that now, and we'll have that when the economy's turned on. Maybe Curve is like bought by banks and it becomes one of the key pieces of infrastructure for financial markets. Who knows? So it's still speculative in that regard. So we can't really take our past experience, Peter, from and say that that'll work again. But that's a good idea. It may work. Or maybe you just get a good deal. $1 on CVX is cranking out 5 cents per VLCVX every 2 weeks. That's a heck of a paycheck, and it's something to be humble and appreciative of. I think all the politics happening, privacy will become more common. Well, that's the historic narrative. That's the Bitcoin narrative. I mean, it's not really privacy. It's more, sovereign self custody and unconfiscatability. And privacy is obviously, uh, you know, Firo is still on there. The evolution of Zcoin and ZK Snarks on the Ethereum network, and obviously Monero, and it's just there's a laundry list of privacy related protocols and tokens and so on and so forth. It's a historic narrative. I don't think it plays it's not directly related to the success of a portfolio. It's a great narrative that's transitory, but the biggest things that affect the performance of a portfolio are analyzing these assets and protocols from a financial perspective, how they perform financial services and provide financial utility. Are they meaningful? Are they systemic? Are they infrastructure? And that's what I've hit on as the biggest narrative over the last 2 years, my friend. Um, Hope that helps. It's been a long story, long narrative, long whatever I've been doing over the last 2 years. But surely this isn't the way the channel started, guys. I'm pretty sure some of you remember that. Thank you so much. Your streams are game changing. You're welcome, Mick, man. I hope it gives you a different perspective on things. I always catch the end of the stream, but just 5 minutes with Noah, and there's a gem in there. My man, Peter. Everyone's recorded. I think there's might be 700. I think I have 700 streams. Either that or it's probably in the sixes and it's close to seven. I'm just shooting from the hip right there, but it's definitely over five. That's crazy. There's hundreds of streams at this point. One Curious View, MakerDAO planning to buy a 500,000 treasuries. Okay, okay. We'll see what they do. I'm not too fond of. When I hear things like that, it's imperative for stablecoins to be backed. Especially, I'm very fond of USDC because that's a fiat on and off ramp. GUSD as well. Very easy to send that to a crypto debit card, and you can spend it. So it's very, very spendable, USDC and GUSD. So maybe DAI, that's the road they're heading down, but they have a mess of an organization, a mess of a community. I don't know what it's really going to be. I don't know. It's a CDP, so it's a Eurodollar, so there's meaningfulness. It has survivability written all over it. It's an old protocol from pre-DeFi 2020. So that's meaningful. But the protocol that I think is speculatively interesting is the only one that's done something innovative and that has survived. And that happens to be Frax. So clearly, it's out on the risk curve. Clearly, there's questions about certain behaviors, certain counterparty risk, and certain nuances of what Sam and team have done But that's why you position size appropriately. How do you take a speculative risk out of the risk curve? It's not the majority of the portfolio. It's 5%, 10%, 15%. 1% to 10% changes everything. You know, the old story, boys and girls. So that is a protocol that is of interest to me. Why? Because it does something different. It is taking things to a next level. It has survived. It was able to manage the Luna collapse flawlessly, and it's done well, and that cannot be discounted. It's meaningful, no matter the criticism of counterparty risk or the collateral that it has. They own the LP, they protocol and liquidity. They own it, so that's meaningful, and that is of interest to me. Vinny go long on canned food and bottled water. Well, Michael Barry said in 2008 he's going long on water, and Bill Gates went long on farmland. So this is going to be an interesting 2020s, ladies and gentlemen. Thank you very much. Wednesday, June 29th at 1:09 p.m. I appreciate every one of you. Tell everyone to subscribe. I hope I could help at least one more person this week. You know the deal. After party on Discord for the most rational community in the entire crypto space. I love popping in there. You guys give me a little bit of a smile every day when I get to chat with you in all our conversations. I wish you all a wonderful day. I won't see you guys on Friday. I'm on vacation, and Monday is obviously July 4th, so I will be back 1 week from today. Wish you all a safe and happy 4th of July and a good weekend. I will catch you on the flip side. Peace.